Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 7th of December. Starting off with the FTSE 100, which is basically in a 100-point range from the area of the 50-day moving average, the blue line there, up towards the 200-day line, 75.80. Looking for a breakout through 75.50, which is basically post-November resistance, and then up to the top of that falling trend channel, the black channel there from back in February, around 76.50. By the end of the month. On the downside, not expecting any weakness or sustained weakness below 7,400, which is basically the support of the last 2 to 3 weeks. The DAX is next, and prettier picture here, which is perhaps not surprising. We're stretching towards the target that we have, basically an end-of-year target, 16,900 now at the top of that broadening triangle from back in May, and we're looking for that while we're above 16,500, which was the old July peak. 50 and 200-day moving averages both rising towards a golden cross, which could happen by the end of this month, the run-up to a golden cross, typically the strongest part in the cycle, and we've had that over the last few weeks. The Dow is next, and here, I suppose, echoing what we're seeing at the DAX, and obviously not at the FTSE. The FTSE, I suppose, is the equivalent of about 2,000 points lower. But here we've had this market consolidate in a bull flag, hopefully a bull flag either side of the old resistance line target there from the end of last year, 36,100. Next level up would be 36,600, and a January resistance line projection, best case, maybe by the end of next month, 37,500. Upside value while we hold above 35,800 and the old July-August resistance, which was previously the year high for this market. Moving along to Bitcoin, and this has been the star of the show in the recent past. Obviously, we've come a long way in a short time, but we were looking for 43,000. We've actually exceeded that. I think the peak, nearly 44,500. We are on a rising trend channel from October, the top of that channel heading towards the 50,000, the magic 50,000 zone. That could be on the cards by the end of this month, although obviously timing always difficult. Upside value while we hold above recent support around 42,000. Maybe allowed down to 40,000 as a extra safety measure, but that rising trend channel there from October looking quite healthy and backing the market at the moment. Moving on to gold, which has also been quite a delight, not quite so much in the last 48 hours, but we have bounced off the 2020 area, which we were hoping would come into support. The old peak there in October around that number. In fact, we bounced a little bit higher than that, which is nice. And above 2020, still looking for 2150 as a retest, which is what we had briefly this month, but also up to 2180 maybe by the end of next month. Just going into a golden cross now between the 50 and 200-day moving averages, which is quite appropriate for this metal. Moving on to the stocks, and rather dull as you would expect, given the way that the FTSE is at the moment, but here Alpha Growth, maybe you've got the first signs of a turnaround. Bear trap from below the October support around 1.2. The longer we stay above that, the greater the chance of a move to 2.1 pence on the top of that July broadening triangle as soon as the end of next month. But we need to stay above 1.2. But we are backed by bullish divergence there, so lower lows for November, but higher RSI trace. Ben's Creek is next, and here we've been following its recent recovery. Suspected that was a bear trap rebound from below the November support there around 9.2 pence, and above that we were looking for initially the 50-day line 12.5 and up to 16 pence or 16.5 pence, hopefully by the end of this month, and that should happen even if then we trade back down again after that. Bullish divergence to accompany the bear trap rebound on Ben's. Brighton Pier is next, and following on from I think coverage yesterday, nice push through the now rising 50-day moving average. This was another bear trap rebound, very similar to the Ben's Creek turnaround, in fact. And in this case, we're looking for 49 pence at the top of that broadening triangle. That's also the area of the still falling 200-day moving average around 50 pence. But looking for the 50 pence area, let's say, by the end of this month, especially while we're above the 50-day line at 37 pence. Covered Destiny Pharma quite a lot in the recent past, and it's back again today. Rising trend channel there from April. Nice rebound above the 50-day moving average, the rising 50-day line. That suggests that we are ready to head towards 90 pence, maybe as soon as the end of this month, while we're above the initial December resistance at 70 pence. Going on to Empire Metals, one of the stocks of the year by quite some margin. We've had a gap fill rebound there. The gap there from last month at 8 3/4 pence. Above that, we're looking for at least a retest of last month's resistance at 12 pence, maybe up to 15 pence by the end of next month as a best case scenario target. Covering Helium 1 again, and here the glimmers of hope coming through with that support line there at the bottom of that falling trend channel from July was suggesting that ideally the shares stay above that line at 1.9 pence. They went slightly lower actually, I think down to 1.72, but we have rebounded, and there's a chance of filling the gap up towards 2 3/4 pence, even if the shares then trade down after that. So some positivity there for Helium 1. LifeSafe Technologies is next, and here, following on its announcement, we've seen the shares break back above the floor of the gap there at around 18.5 pence. Above that, we're looking for potential move, maybe over the next month or so, back up towards 25 pence and the old October support for this market, but we need to stay above 18 pence in the meantime. Novacyt is a stock which has had plenty of coverage over the autumn. Bit of a 3 steps forward through 2 steps back kind of price action here, but we gapped off the lows back in November, and then we gapped up again in November with a little island reversal. So the overall pattern here looks quite strong, even though there's the pullbacks coming in above the recent swing low, 59 pence. Looking for at least 76 pence again, perhaps by the end of this month. Maybe by the end of next month we'll get the long-promised move towards 90 pence and that February resistance line projection. But the key here is staying above the latest gap and also the 50 and 200-day lines. Stock which doesn't get much coverage is coming up next, Sancus. Here it looks like we've got a rising trend channel base from June. Top of the channel there at 0.92, and we're looking for that while we're above October neckline resistance at 0.63. The low today at that level, and the 50-day line already rising, which should give us enough momentum to hit that 0.92, maybe even by the end of this month. Moving along to Shield Therapeutics, and here one of our favorite setups, the gap off the lows, unfilled gap to the upside off the lows, and also through the 50-day line there at 6.33 pence. Above 6 pence, we're looking for the shares to perhaps head up towards the bottom of the gap down that we had back in September at 8.5 pence, perhaps as soon as the end of next month, and hopefully a bit sooner than that. Another one that we don't really normally look at, TPX, and here rising trend channel there from back in February, and we spiked above a rising 50 and 200-day lines. That suggests that we could head up towards the low 60s, 63 pence at the top of that channel by the end of next month. Nice progression here with the vertical moves, then sideways, and then vertical moves again. That step progression, normally a decent thing in charting. Finishing off again with Upland, which managed to close above the gap down that we had back in October, 3 3/4 pence. Above that, we're still looking for up to 5.5 pence by the end of this month now, given the way that the 50 and 200-day lines are both rising, but that gap close buy signal already working for Upland over the course of today's session. Just worth noting the breakout in Woodbois at the moment. We've broken through the 200-day moving average, the black line there around 0.73, with quite a bit of momentum. We haven't been above the 200-day line since back in September last year, so this looks significant. There's a potential trend change, and initial target here up to a penny, which hopefully will be in the next few days. Eventual target maybe even as soon as this end of this month up to 1.4 pence, but obviously might allow a little bit longer on that scenario. Key here is staying above that 200-day line in the meantime. That's it from me today. More updates tomorrow.